Okay, I think we are good to go. We are live again, once again. We're live again this week with Selfwealth Live, Selfwealth by Surf Live now, on the 20th of May, 2025. And I'm excited for another great show. The markets are sort of going a bit sideways, but that's okay. It's kind of a good thing. They're not going down, which is the main thing. Lots to talk about, Jace. How are you this week?
Hey Rog, I'm good. Good. Glad to be back here for another week of discussing the markets and looking at some stock codes, all those fun things we do each week. So yeah, looking forward to today.
Definitely. There's already a few people with their tickers ready to go, which is great to see. Thanks for everyone coming along once again and saying hello to us and providing us with some great questions and some tickers to have a look at. Really appreciate you guys being here. With that said, let's have a look at the disclaimer to start off with. Thanks, Jace.
Yes, so of course, everything we do today, general commentary only. So there's no personal advice here. And I'm going to quickly pop up the disclaimer that we do each week. And that goes through all that general commentary. I'm also not part of Selfwealth or Safe. I'm motion trader. My details are at the top, licensing, etc. And beneath there, we've got the Selfwealth Safe disclaimer going through the same sort of information.
Yep. Okay. Fantastic. All right. So, as I've alluded to before, we've got interest rate decision coming up here in Australia. See what happens there with the markets. So, some high impact news coming up. But let's have a look at that Aussie market and see how that's faring, Jace, since we last spoke.
Yeah, so let's jump over to the charts. And first one, of course, is the ASX 200. And it's been a good week since last time we caught up. There was a brief pause, bit of an early peak, then a brief pause, and then rallied again over the last few days. So buying has returned again to the ASX 200. It's now back to where it was in mid-February. So we're around these levels, around that middle of February sort of mark, and also where we are now, ASX 200 is only about 3.5% from the February all-time high. So, Rog, it's really quite amazing when you think about it. And I think this was probably for probably most people an unimaginable situation to be in just a few weeks ago when we had all the fear and worry about what was going on at those lows. And you just think of all the doom, all the dire predictions all over the internet. And I think when I look at it, I think one of the standout lessons from this is it's just not having rigid views about what will happen next. So when everything was at its worst, that's when fear was at its highest, and the views were that things were going to get a whole lot worse. But as I say, don't have rigid views. Doesn't mean things can't get worse, but don't expect that they have to get worse, because all sorts of things can happen in the market. And the fact is that nobody knows what's going to happen next. And that's why I always talk about being guided by the price action and having an open mind, of course, along with a set of rules or a process that you follow. Because in the stock market, this just goes to show the unthinkable has a habit of happening more often than people expect. So if we've got those rules to play by, I think we're better placed to dealing with the unexpected when it does happen. So where does that leave us now? Well, prices are back above these moving averages. The red one being the 50-day, the blue one being the 100-day. And this is an important development, because by being back above the moving averages, what it does, it diffuses the vulnerability that was present below the moving averages. So this period from late February through into April, below the moving averages, as I often say, the bad stuff tends to happen below the moving averages. And sure enough, that's exactly what we experienced. So what we have now, we're back above the moving averages, so it diffuses that vulnerability. And I think it sets up the potential for higher levels. You'll also see that these moving averages are starting to turn higher after 2 months of being in negative territory. So when I say negative, it's negative when the shorter average, the shorter term average being the 50-day in this case, when the shorter one is below the longer one, the 100-day. And that was the case for a couple of months. They haven't quite crossed back yet, so the 50-day is rapidly catching up to the 100-day. But if prices hold where they are now, or even move a bit higher, it's I think that moving average crossover could occur in maybe the next week or two. And then that raises a question, well, what do we do now? Is now the time to start aggressively getting stuck in and buying stocks? And I think the answer to that is no. For me, it's been a process of gradually getting back into the market over the last 5 weeks. And we spoke, it was back in mid-April, about the potential possibility of getting into like ASX 200 ETFs. And then as prices rose, it was selectively getting back into stocks as they started triggering new entry signals. That's been the way I've been approaching this, and it's what I've been discussing both here and in my weekly strategy sessions on Fridays. And I think that remains the approach. I think it's an approach of gradually adding to a portfolio as suitable opportunities appear, rather than it's a flick the switch and everything's just pile back in. It's been a case of getting back in and continuing to do so. Um, one of the things I think we should be thinking about at the moment is the potential for maybe some type of a pullback. And one thing we do know for sure is that there will be a pullback at some point. But of course, and this is a tricky part, we just don't know precisely when that's going to be. Is it going to be from higher levels, current levels? There's no way to tell. But I think that pullback is somewhere probably not in the too distant future. Let me add an indicator. I'll show you why I think that. So this just shows the percentage. So this indicator down here, it shows the percentage above or below the 50-day moving average it currently is. So there's our 50-day moving average, and the market at its current point, if you project down to the moving average and you look at this indicator, it's currently about 4% above the moving average. And what we can do, let me just compress this. I'm just going to run a marker along here so we can just compare this to previous periods. And so the market comes in at around 4%. And what you can see when we scroll back is that 4% is sort of like a level which does tend to cap advances, or at least lead to some sort of a pause. Yes, there can be overshoots, but generally speaking, 4% is sort of like about as stretchy as the market gets above the 50-day moving average before we get some sort of a pullback. And the other thing you notice when you look at this is it doesn't actually ASX 200 doesn't get a 4% or more above its moving average that often. Just looking at this, you can go back and look at this later on at your own pace, but it's really only once or twice a year that it will get this extended above the 50-day moving average. And that's usually a good indication that near-term upside is limited. Now, don't get me wrong when I say that. I'm not suggesting there's a big fall coming. Often these pullbacks are shallow and only last a few weeks. So just quickly looking at, like, you just look in this period during 2020 and 2021, where the market did get up there, it's just a shallow pullback before prices rallied again, and you can see that playing out a few times. So look, I wouldn't think this is necessarily a time for a big fall, but some sort of a pause nonetheless. And it just means that I think the risk reward for buying, it just often diminishes when prices get stretched above the moving averages. Other factors to consider: prices are close to an all-time high, so that's often a reason for prices to pause as they approach an all-time high. And also bear in mind that prices have quickly gone from below the moving averages to above. And when that happens, it's particularly when you get these V-shaped patterns in the market, where the market quickly falls and the market quickly springs back. When that happens, we often get a period where the market does pause and let the moving averages catch up. I can just quickly show you an example from not that long ago. It was the COVID decline. That was a V-shaped recovery. Prices they fell, and then they got back above the moving averages, and they paused and let the moving averages catch up, and things rallied again. So I think that's worth considering at the moment. I think the play here is to continue doing what's been working, and that's been buying where opportunity presents and letting profitable positions run. I think the next pullback will be important. It could tell us, and I think it could tell us quite a bit. What I'd like to see would be the ASX 200 holding on to most of these recent gains and maybe consolidating above the moving averages while the averages continue to turn higher. And if the index can hold on to most of these gains, then I think that's a sign that there's that strong underlying buying interest on dips, which is what we want to see for hopefully a continuation of this rally in the months ahead.
All right, fantastic, Jess. Good view once again. Not to have conviction of where you'd like things to go, but having some possibilities of what can happen, and being flexible around that is important. And just one question before we move to the next market. You mentioned how we sort of go in slowly and not with every single opportunity at the moment because we're still sort of treading cautiously. Can you just give us an insight of what you're looking at those individual companies that are your picks right now? You're buying the ones you're going to buy effectively versus the ones that you might not get into.
On a company like, we can distinguish between index and company. So index wise, I suggested a few weeks ago, maybe with the market being so stretched below its moving average, it could be worth wading into an ASX 200 ETF, maybe even as a longer term position, because it seemed like such an oversold position. And the market's not going to go to zero, whereas an individual company can. So I don't want to try and pick a low on an individual company, but longer term dollar cost averaging into index ETFs can be an acceptable play and often can be a good play. On an individual company level, I don't want to buy a stock that's plummeting below its moving averages. In that case, I'd be looking on a company basis. I want to get stocks that have moved from below their moving averages to above. So just assuming this was a stock chart we were looking at, a stock that's rallied from below the moving averages to above or to their moving averages and then starts to break higher. That's the sort of stock I'd like to buy. It could also be a case where a stock's been trading sideways along the moving averages. And there are companies which have done this during this recent volatility, stocks that didn't sell off but more traded sideways and then start to break higher as conditions have stabilized. They're again the sort of company that I'm looking to buy. I'm not looking to buy stocks which are in these sort of downward phases, hoping they're going to turn higher, because sometimes they don't turn higher or sometimes they languish for years. Yeah. So it's about looking for those momentum situation in stocks where the path of least resistance appears to be the upside, managing risk around that and saying, well, okay, it seems to be breaking higher now, but I'll look like this example here. Again, assuming this were a stock price. Prices break higher, it's looking like it's going to continue, but then maybe there's a pullback and that momentum is lost. So then I'll cut the position, take a relatively small loss and move on to the next idea. And but again, it's just looking for those situations where we've got a setup where we've got an asymmetric risk-reward profile. And that asymmetric means where we can limit our losses, but our upside, based on the overall momentum, looks like it could be a multiple of what we might risk. And it becomes a numbers game. It just keeps looking for those positive setups. The ones that work, keep them. The ones that don't work, cut them, and just keep recycling the money into that same setup process. And over time, I think that gives us the best opportunities.
Yeah, no, exactly. And I think obviously going over your rules briefly just then was important. I think my question is also more around, let's say you had 5 opportunities, and they all did the same thing with your rules, right? And you saying you don't want to get involved in all 5. Would there be some sort of filter you would use to choose between those companies?
Look, sometimes you might buy all 5. Other times, if you've only got enough capital for 2, you've got to make a decision. And it's like, one of the things I say to people is, it's not the individual stocks that are so important over time, it's the process. And because people get hung up with this, they say, well, I don't know which one to choose. I'll choose the wrong one. But I think it's it's the process. So if you do choose the wrong one, so be it. That's going to happen. But over time, if you keep following a robust process, the odds shift in your favour, and you will pick the right one at some times, and they'll run, and hopefully then you do well. Other people, look, some people will get, they might see five buy signals. Like Motion Trader will give out a number of signals, so there might be 5 stocks that meet the entry criteria, and you do just want to narrow it down to one. And well, that's where there's people will do it different ways. Some people will then use that as a short list to go and do some fundamental research, check out the individual companies, see the industries they're in, do they pay dividends, and there could be factors there which guide their decision. Other people might prefer more speculative stocks. They might prefer larger stocks. Again, that can narrow the choices. Some people will go and they'll call up their trading software, and they'll look at it and say, look, okay, well, one stock is just breaking out of a sideways consolidation. I like that. Whereas another stock, it's triggering a signal, but it's triggering it from a little bit more stretched above the moving averages. So maybe I'll pass on that one. There are a whole range of ways to do it. I don't think there's just one way in particular. My own process is I take the smallest out of the. If I've got capital for one stock and there's 5 stocks, I'll take the one with the which is the smallest of those 5 stocks, because I'm looking at the stocks which are outside the ASX 300. So that's one of my criteria. I'm going for the smaller growth potential companies. But that's just my way of making a rules-based decision each time without having to bring any discretion into it. But there's no problem with bringing discretion in if that's what suits people as well.
Yep, no, fantastic. At least it gives you one way of showing that, oh yeah, you're looking for growth stocks, or you're potentially looking for ones that to provide dividends. That can be a filter as well, right? So, fantastic. Okay, let's move on to the American market then. American markets.
Okay, S&P 500, and this has been amazing, hasn't it? It's one of the great market comeback stories to see prices down 18% for the year 5 weeks ago, and then we look at where the S&P 500 is now, and it's actually up for the year. It's not up by much; it's up by about 1.5%. But from being down 18% 5 weeks ago to up 1.5% now, it's one of the great turnarounds. The latest rally takes S&P 500 above 2 key technical levels. So the first one being the 100-day moving average, and also the 200-day moving average. I won't put it on this chart today. I've been through that in the past, but the 200-day moving average comes in just a little bit above where the 100 currently is. And prices often pause below these key moving averages when we're getting these V-shaped recoveries. When we look back at past V-shaped recoveries, often when prices get to the 100-day moving average, there is some sort of a pause before often breaking through. Quick example, we used the COVID crash for the ASX to give an example. We can do so here as well. So see how the market rallied back, got to the 100-day moving average, had a pause for a couple of weeks, then broke through, rallied, pulled back to the averages, and continued on. So the moving averages can be quite important reference points to be aware of, because we do get a lot of price action around them. And coming back to the current price action, and you can see that's what happened here. We had about a 1.5 week pause below the 100-day moving average. I thought we could have actually seen this consolidate for a little bit longer, maybe another week or two below, but that wasn't the case, and we've had this strong week and a half since with prices rallying. I think the persistence of this rally we've seen in recent weeks is telling, and I think it tells us that investors want to get back into the market. So those who sold, there's been a real push to buy back into the market. Sometimes you get a market which sells off aggressively and there's not a rush to get back in. You get a shallow bounce and it's like people who are queued up waiting to get out. They're trying to sell into a rally. This isn't a rally which has been sold into. You can tell by the strength of the advance. It's been dominated by those wanting to get into the market, not continue to unload stocks. And anyone waiting for a bigger dip has been left behind. I heard from, I think might have been on my YouTube strategy session over the weekends. I think someone left a comment saying they themselves they got out early, and so they were pretty pleased with themselves for that. But they never bought back in. They always thought the market would go a bit lower. And like, just reflect back on those comments I made at the beginning. It's don't have rigid views about what the market is going to do, and instead respond to the price action and bring that into line with your trading rules. So people who are thinking, look, this is going to fall further, and plenty of people told me that when I was saying, look, maybe consider an ETF. People are saying, no, why would you do that? Market's going to crash. Well, it didn't. It's rallied a long way. So if you had a rigid view, you've been left behind. So again, just don't have rigid views. Be open-minded, because the market doesn't care what we think. It's how we respond to what happens, which really defines how we're going to perform. We're also seeing prices get through this resistance. See this blue horizontal around 5,850. This takes in the high from October last year, and then there are several lows over the months that followed. So it's a reasonably important technical area, and the market's just nicely pushed through there. I like I was saying with the ASX 200, I think a pullback is due in the near term. Prices are getting stretched from the 50-day moving average. Doesn't mean it has to happen tonight. There's nothing saying the market can't push a bit higher, but I think we're closer to a pullback. I think we are getting closer to that pullback towards the averages. This has been a big uninterrupted run. So a pause while the moving averages start to catch up, the cross and then catch up, would be typical of this sort of price action. I think the play here, it's to approach the market from the long side, be looking for opportunities that stand out. And I say stand out, so it's not just buy any stock, not buying stocks which have run really hard and themselves have become stretched above their moving averages, but just looking for the right opportunities. And yes, I think a pullback is probably due, but then I'd be using those wide trailing stops to try and see off any weakness, rather than thinking, okay, a pullback is necessarily going to be a bad thing. It might just be, we want to see what the pullback looks like. If it pulls back and it can hold on to most of those gains, then it probably can set the market up for higher levels later. So at the moment, I'm happy moving back into the market as I've been doing, and using those wide trailing stops to try and hold onto positions if we do get some sort of a pullback in the near term.
Yeah, fair enough. Very good. All right, and Hong Kong then?
Over to the Hang Seng, and so prices are now starting to become re-established back above the moving averages. So again, I've got the 50 and the 100-day moving averages. And this the sell-off that we saw during April, it's now looking very much like a panic-driven event rather than a larger bearish trend change. I think the key now, as I've said with the ASX 200, as I've said in the S&P 500, what does the next pullback look like? If prices can hold on to most of these recent gains, and like for example, if we got price action that looked like such, where prices start trading sideways for could be a couple of weeks, several weeks, moving averages catch up, that's the sort of price action I'd be looking for. And if we got that could then set up a platform for higher levels. So we don't know. Maybe we don't get price action like that, but that's the type of price action which I'd be looking for, as opposed to something like we saw back in October, where the market rallied, then it quickly gave back those gains. We don't want to see the market quickly giving back the gains. We want to see the in any pullback, any potential pullback being supported. And then that would be a sign that the dip is being bought. Overall, I think it's looking encouraging. We can watch it for a bit longer, see what this next pullback, if it comes, see what it looks like. But again, I think it's looking encouraging. And just lastly, the Chinese market, same applies here. Prices are back above these moving averages. We had the fall beneath, quickly came back, consolidated around the averages. Now it's pushed higher again, and so the buyers are very much the dominant influence here. Not the it's not this isn't a sell into the rally. This is the buyers taking control at this point. Another important development has been that prices have made a new high above the March peak, and it's only fractionally above, only just a little bit above, but nonetheless, it's showing that tendency for higher highs to start being built into the price action. So I think the focus here is on the upside potential. Just stepping back and looking at this broader picture of the market, this does look like a basing structure that's been built over the last couple of years. So you can see how a series of lower lows has now given way to higher lows. So it gives that you get that rounding basing type of formation being established. It's a slow mover, but nonetheless, it is what we often see at during large basing periods. So let's see with this one again. Let's just see how this latest rally is. What follows after this? The weak point, I guess, with the Chinese market is that it has had some notable rallies in recent times, but it then quickly gives all the gains back. And so let's see what happens this time. Can it hold above those moving averages? And if it holds and we see that buying interest coming in and underpinning prices, well, then it really does set the stage for a pop higher and the potential for a trend to get underway. So it's it could be the early signs that higher levels are coming.
Yeah. Well, I mean, as I was saying yesterday, no doubt, and speaking to clients as well, especially one specifically this morning, I was speaking to, got burnt during a period similar to what we just had, where it just dropped quite quickly because they weren't watching the market, right? The important thing to reiterate about everything we talk about is having this rules-based approach, but also, as you say, as usual, Jason, having these levels where you're monitoring for if you need to get out of, right? So I thought this would be a good opportunity to plug a new feature on the Selfwealth app where you can actually use price alerts on the app, on the mobile app, to make sure that you're actually putting price alerts if they do drop to a certain level on your individual stocks. Now, we use TradingView. You can also use price alerts on TradingView. I think they work quite well because I use them on TradingView as well, right? I think they work really well to continually monitor all my individual stocks to make sure when I don't have my eyes on the market, that if it hits a certain level, I know it straight away and I can go in there and take action if I need to, right? Obviously, you've got stop losses that you can use on the Selfwealth platform and any other platform might have as well. But I just like having that price alert and then being able to take action over these things, right? No doubt now I'm a little bit more, I guess like most investors as well, probably a little bit more hesitant to get into the market, as you say, because we're cautiously optimistic than what we were 2-3 months ago when we didn't have this big push down, because we just don't know what's going to happen. So having this rules-based approach for me, and I'm sure for everyone that's watching, is super important. We just got to try and stick to the rules as usual, right? Try and stick to the rules is the key, right? So yeah.
And that's hard. That can be hard to do because emotions get in the way, and sometimes the emotions short circuit our ability to follow rules. So I think the more practice we have at following rules and the more confidence we have in the rules behind our process, the more able we are to stay the course. And I think it's a really important distinction of someone who does well over time versus someone who maybe struggles a little bit more, is that those who do well they seem to be better at identifying when they stray from their process and maybe get a little bit more inclined to bend their rules. They're good at pulling themselves back onto course and back to their rules. They don't waver for too long. Whereas other people will go, okay, yeah, I've got rules, but forget the rules, I'm going to do something else. And it's very hard, I think, to build that consistency over time if you're always second guessing your process and doing other things. It's like a good trading plan is only as good as your ability to execute it. And if you're always jumping around doing different things, it's probably not really going to do its job.
Yes. All right. Let's get on to some tickers then. Let's start with Sunils. Let's have a look at AX1, please.
Well, we're still below these declining moving averages. So just stepping back and looking, it really has been. It's been largely range bound over the last couple of years. There hasn't been like a dominant trend. I'd be cautious towards this stock. My concern would be that there has been a sell off. It's rallied back towards the moving averages, and could it sell off again? Now maybe it's like, could we say maybe there's support around this region just beneath the share price. So I guess if it can hold above this blue shaded region, well, maybe it could form a bit of a base around at these lower levels. Maybe it is starting to turn higher again. But if it were to sell off from the moving averages, get back below these levels from April, it'd be a stock I wouldn't want to be involved with then, because then it does open up downside potential to lower levels. So it's one I'd be using the Selfwealth price alert perhaps, or a stop loss, just so I've got the discipline to draw my attention to it, or to sell it should it deteriorate. Not a stock I'd want to buy at the moment. I'd rather see it flip to the positive side of the moving averages, then consider it. For the moment, it's one to be, I think, careful with.
Okay, LYC.
It continues. It's like we've looked at this stock a lot over time, and I think there's a basing potential there. Like, it looks like it could be like a rounding base in place. So you can see, just like I discussed with the Chinese market, you've got the series of lower lows, which then gives way to rising lows. So it's got the building blocks of an uptrend, but it's been such a hard one to catch, because it has these strong up moves, and the strong up moves are followed by equally as strong declines, and that cycle's continued in recent times. A strong move up, and now it's a strong move straight back down towards support. So it is broadly within this potential turnaround structure, in that, like, the most recent low is still higher than the previous lows. So it's still making its way upwards, but just in a volatile fashion. If I had it, I'd be happy holding it for now, see whether it can continue this volatile series of ups and downs. I guess it could even I was going to say it could be considered as a buy, coming back here towards this support, which I've got drawn in from a previous time at around $7.30. But I just don't like the way it's pulled back so sharply. It's like what we want to see. You have these strong advances. You want to see the market pull back and consolidate, but hold on to most of the gains. That hasn't happened with LYC. It's given back a large portion of those gains. So if I wasn't in, I'd probably be watching from the sidelines, as I am. I've had a couple of goes at buying this and sold out a couple of times. So yeah, I just don't like how it's come back so quickly. But if I was in it, I'd stay there, wide stop, and see how it goes. See if this basing period can actually start to lift and turn into a larger advance.
All right. Next one's Web, WB.
WEB.
Yep.
Yeah, it's still within this down trending phase. It's below the declining moving averages. Yes, it could form a base at down at these lower levels and turn higher. But I'd be avoiding it for the moment because we're below these declining averages. It looks like there's some strength to the recent rallies. Like I like that it's rallied and then you get a sideways consolidation rally and then it's holding onto its gain. So maybe there's some sort of a turnaround going on. But we have seen this sort of price action before where it looks to get some strength and then consolidate. But then as we saw in the recent example, it then sold off again. So I'd be careful getting into this one early. Maybe there's something on the go, but I'd rather wait. See it rally further, let the moving averages start to turn, get maybe a consolidation, then buy a breakout. So I'd be paying more. I'd be getting in at a later level, but the advantage of possibly getting in at a later level is that I avoid getting in should this rally fail and prices turn lower again. So a little bit early for me to consider this one.
All right, thank you. Next question here. Could you have a look at EOS? What would be a good entry point? Confirmation of an uptrend.
Yeah, it's getting pretty close to a signal now. So the moving average. So from my perspective, from a motion trader perspective, I need the moving averages to cross. I need the 50-day to be above the 100-day. So that's close to happening. That could happen in the next few days. And then I need to see the shares at a 70-day high. So it meets that criteria at the moment, but not on the moving average front. I think this is I guess for me now, it's going to come down to what the next consolidation looks like. So it has gone from below the averages to above. Often when that happens, the price will pause and do some consolidation. Like you can see from this example back in 23, it rallied, consolidated along the moving averages, rallied, then pulled back, and then moved higher again. And there was some work before it got some more momentum to it. So I'd probably wait for the next consolidation for an entry. It's like if you buy it now, you think, okay, if I buy it now, where's my stop going to be? We can just measure it out. Like, I guess, look, if someone was really keen and is happy, and if someone wants to buy this stock and doesn't want to risk missing this stock, well, I guess buying at current levels is an option, and then having a stop, I think it requires a stop down around 25% back below these previous highs and back below the 100-day moving average. So it could be bought at current levels, but knowing that it's quite possible there will be a pullback at some point, which will bring it lower. Before maybe going higher. So current levels is one play with that wide stop, or waiting for the next consolidation, see what it looks like. But it definitely looks like there's some momentum returning into this stock. I think it's a stock which is worth following. I think the upside potential is certainly there. Like if this is just like a large corrective consolidation, and it certainly does support the potential for higher levels. Whether that eventuates, we don't know, but I think it's got those asymmetric properties where I think the upside possibility is significantly greater than how we could maybe manage risk through buying.
Okay, fantastic. Jennifer, thank you very much. Jason, I've had some great success since joining Motion Trader as a member, and seeing you on this show each week is great. Can we have a look at MAU, please?
That's fantastic, Jennifer. Thank you for that. MAU. This is a gold stock, and yeah, it's an emerging gold stock. We've looked at it a few times. I've got this marked in from a previous period we're looking at. It was consolidating for 9 months or so and broke higher. What's happening now? It's gone from below the averages to above. The averages have crossed, got the makings of a trend developing. Recently, just broken out of this sideways consolidation, which you can see. So rallied, we've got this sideways trading into the moving averages, and it's recently broken higher, broken out of this range. I think it's probably this is a stock which could be bought at current levels, And I think the exit point is just going to be back down here, back towards below maybe at least the 50-day moving average for a more aggressive stop, or maybe below the 100-day to give it a bit more room. And I think there's definitely the upside potential there. So we've got these previous highs. That's interesting. So previous highs can be a resistance point. So it's rallied up to that previous run of highs at the moment. I'd be inclined to think I'd probably give more weighting to the recent price action, so the consolidation and the breakout and the moving averages. If we wait for the previous highs to break, then we're looking at higher, and then then I'm going to say now maybe it's getting stretched above the moving averages. It's like there's often competing things we're to try and balance out. I'd be inclined to say, look, this is a stock which could be considered at current levels with a relatively close stop of like say around 14-15%. I think that's great risk reward for one of those smaller resource type plays.
Okay,
But
fantastic.
it is a thinly traded stock, so people should bear that in mind as well. So look at the volume on offer, volume on the bid and the offer, and decide whether that's the sort of situation which is for you.
All right. Let's have a look at the vendors. CVB, please.
So what was that one, Rog?
C, V, and B.
VB?
Yep, that's the
Um, no, look, just it's the moving averages, and the price is consistently below there, and it's close to making a new low at the moment. So, unfortunately, everything's going against this stock. Close to making new lows and declining averages. I think when we go looking in this category, the odds are just against us. There's nothing here that says that the share price is about to turn higher. It's more, I guess, being hopeful that the share price might turn higher. So, unfortunately, I think this would be one best to put to the side. Maybe watch. Nothing wrong with watching it, but I'd be careful actioning it.
Yeah, it just makes me think seeing these stocks as always, because now that we've done the show quite a lot and we know what we're looking for. Whilst these are only our just general guidance, right? If you've got some fundamental reason to get into this, or you like the company because it's at a cheap level, right? Then you need to do your own research and make sure you get into it. But this particular stock here, or the price of it, it could be quite alluring to investors because it's so cheap, right? But really, you've got to think there's so many opportunities out there. Are you just going for the cheap companies and looking for these like big returns and growth, or are you looking for the companies that have got more probability that they're going to move forward? Because companies like this that have low liquidity behind them, and not much going for them technically at the moment. And that could change. It's one of these traps. I feel like I've been involved in a lot of these, investing in a lot of these, and they get me nowhere. They sit there, they don't do anything, and if anything, I lost a lot of money from it myself. So definitely one of these traps that I keep my blinkers away from it and really trying to stick to the rules, right? So
so like cheap can get cheaper and cheap can go to zero. Not to say that's going to happen here because I don't know, but just buying because something seems down and out, like people think, oh, look, I'll be contrarian. I'll buy what others don't want. I think contrarian works when something's out of favour, but you've got signs of a turnaround going on and you can maybe get in early. But just going completely against the grain, I think you put the odds against you. Yes, you might get one or two over time where you get in at the lows, but I don't know that the upside you get from those compensates for the times where you get in something and it just keeps drifting lower. Because at the moment, to buy a stock like CVB, it's going against the money flow. The money flow is leaving the stock. So why do we want to go against the grain? Do we know more than the money departing it? And I certainly don't, because I'm looking at the price action. I'm basing decisions based around the money flow, the momentum in the share price, and that's to the downside. So a situation like this, it's capital preservation comes before the lure of trying to pick the low.
Yeah. All right. Let's have a look at IEL. Thanks, Jace.
Same situation. It's like the trend is still down. It's like we've had a couple of up weeks, but is that enough to say that the low's in? We've seen this sort of price action before, where you get a few up weeks, and you can say, "Oh, look, the low might be in." Here's another example where we got some quite good upside, like the temptation there. Oh, look, is the low in? But the moving averages never cross, never turn higher, and you can just keep going up these rallies. This time could be different, but I think the odds favour that the more likely outcome is a continuation of what we've seen in the past. Ultimately, there's probably a low, and this is a type of situation where it could turn higher from, but I think the odds favour that we'll probably see another low before we see a turnaround. So I'd leave this sort of price structure alone. It's too hard. I'd rather buy into the momentum, buy on the good side of the moving averages, not the underside of them.
All right. And the last one from Devenders LLC.
Sorry, which one?
LLC.
Yeah, again, we're below those declining moving averages, and this has been it's been a stock which has had a few, it's had a couple of signs that maybe things were starting to turn, but they've quickly darkened again, and the persistence below the moving averages has continued. Again, it's a stock I'd be leaving alone. Could this be the final low? It could be. But what makes this point different to all these other points? And at this stage, I don't think anything stands out saying that it does. And that's why I believe the odds favour. Like if I was going to have a bet either way, I'd bet that the share price sees sub $5 before it sees $6.50 or $6.30, whatever the distance on the upside is to the downside. I think it's more likely to see the downside. Now that can be wrong. Odds are odds. Odds aren't guarantees, but just shows a balance of probability. It's more favoured, I think, to the downside at this point. So best to leave these situations alone.
All right, let's have a look at. Sorry, I lost my point here. ASG from Bob. Thanks.
Yeah, well, this has flipped nicely from below the averages to above, and now it's having that pullback. So we spoke about this earlier, where stock goes from below to above. It initially gets stretched above the moving averages, and then you get that pullback to the averages. We're seeing that now. So has there been enough of a pullback? Firstly, if I was in this stock, I'm happy staying in this stock. I like that I like the strength of the upside, and so far this looks like a corrective pullback where the dip's being bought. So that's all. I think that's all positive. So if I was in this one, I'd be happy to be in it. This is sort of stock where I could consider buying it. I could buy it at current levels potentially, and say, okay, I'm going to have a stop below the 100-day moving average, maybe about 15, 16%. So it's probably from a risk reward perspective. Yeah, it probably stacks up. It could go. There's no cap on the upside. The question for me would be: does it need to spend a bit more time tracking sideways? Do we end up seeing it? A bit more time to sort of consolidate that strong rally. So that's the only question around the timing of a buy. It could certainly be bought now with a stop where we were discussing. It could also be watched and see whether we get that sideways movement where I think there's probably a good chance that happens. Then it could be buying as the moving averages catch up, or buying a breakout. But one I'd happily have and would consider looking at if I didn't.
Fantastic. Let's have a look at Kirby's now. GHY.
Yeah, well, it's interesting. So it had this time below the averages, which is when I don't want to look at it. But now it's flipped. It's gone from below to above. I've had this consolidation, not quite sideways, but it's pretty much along the moving averages, while the moving averages have been turning and staying across now. I think this is a stock which possibly could be bought at current levels with a stop back below the moving averages, having to give it a bit of space, probably having to give it 15 to 20% maybe, or it's buying the breakout. It's buying a breakout maybe above the high in mid May. So maybe it's buying a breakthrough 76, 78 cents. So a couple of ways to play it. Maybe buy now, see maybe it continues tracking sideways for a bit before breaking higher. Of course, it could also break lower. That's why we have an exit point. But I think there's definitely asymmetric appeal to a stock like this, with the structure improving from below the averages to now consolidating above. It's now going with that momentum. See where that momentum takes us. Sometimes that momentum can take us a long way. Other times it just flounders and comes back. So lose a little when the momentum doesn't kick on. Hopefully make a lot when it does. Definitely one to consider, or to at least have a look at if you like that part of the market.
Okay, good one to look at. TEA then.
Only a relatively new listing. It's hard to have a strong view on this at the moment. It was a nice trending period. It's like I'd probably have an upward bias to it, because it has it's had this time below the moving averages, and it wasn't able to gain any further downward momentum. It's now got its way back above. So I'd probably give it the benefit. If I had it, I'd give it the benefit of the doubt that maybe we can see some more upside. But look, there's just doesn't seem to be an underlying trend to it at the moment, and being such short history, only about 12 months of history, it's a bit harder to base off. But if I'd got it early on and I've seen off this correction, yeah, by all means, I'd be inclined probably to hang on and see how it plays out. I could have an exit level below the that April low, and see whether it can continue to move back up towards its highs. But yeah, not a strong feel for this one, unfortunately, Rog.
All right. Let's go on to PPS, please.
Wrong one. Yeah, it's a bit like the previous stock in that we had this good trending phase, but now we're kind of in this. It's a bit like when you're stuck in a kind of a consolidation where it's moving either side of the moving averages. It's like, could it continue just to be sideways and messy for a while? We don't really have that underlying momentum to hinge off, and it's not like it's been trending and it's just pulled back to the moving averages. It's like broken below the averages, and now we're just sort of like swinging either side of them. So I've had this in my portfolio in the past. I think I sold it during earlier in the year as it came back. I think it triggered a motion trader stop. So I'm out of it. I'd consider looking at it again if we saw more consolidation than a break higher. So I'm certainly open to it as a potential stock, but I just don't see the trade at the moment. It's probably a stock I'd rather watch than participate in.
All right, AFG.
Yeah, well, this is so here's this basing structure. We've talked about this sort of structure a couple of times today. One was in the Chinese market, and I've forgotten the other time we saw it. But again, you got this this situation where you see the lower lows give way to rising lows, and now prices have broken out above. There'll be different ways to do this, but we could say, look, I'm not going to line those ones up. Maybe it's more the horizontal. Yeah. Generally, you'd say, look, there's a series of peaks, so it sort of like becomes like a top of a range, and it's broken out above there. So I think this is a stock with turnaround potential. It seems to be turning around now. So the question for me is, it's now pulled away from the 50-day moving average. Does it need to pause and consolidate, or do you just say, look, I'm happy to buy it at current levels? Looking at where a stop would need to be, like it could be bought at current levels with a 20 to 25% stop. I think that's reasonable, because the upside is that it goes up to its previous highs and beyond. That's potential, of course. We don't know, but that's what we deal with, potential and everything. So I think it's asymmetric. It could be bought now with a wider stop, or wait for the next consolidation, see if it maybe pulls back to the breakout point, which often happens. Often you get the initial run, and then you get the pullback to the breakout point, and then sometime after there, you then get the secondary advance, which then breaks higher. So buying on the pullback or buying on the secondary breakout can also be good plays, but we don't know that price action will play out. So different ways to do this one, but I think it's a stock for the watch list or a stock for the portfolio.
All right. Next one's from Evangeline. SYM, please. US stocks. SYM.
Potentially starting to turn around. So it's got back above the moving averages, and the averages are turning. We have seen this sort of price action before and hasn't played out. So probably a little bit early for me. But again, that old story, if it can consolidate above the moving averages and then break higher again, that provides I think, an entry point with a risk exit point, which is not that far below the market. So it becomes a nice asymmetric setup. At the moment, I'd probably just watch it. But yeah, maybe something is setting up here. I like that's gone from below the averages to above. The key always for me is, do we get this next? If we get that next, then we get a breakout. Then for me, it's a buy. At the moment, it's a setup to a setup rather than being something which I think is ready to go at the moment. One to keep an eye on.
All right. Next one's ASAN.
Is that the one, Rog? ASAN?
Yeah, I'd say it's that one. Asana, yep.
Yeah. So yeah, very much caught up in the panic selling. Do like the way it's been coming back. It's been you can see like the up periods are quite strong, and then the consolidations are fairly shallow. Yeah, it is one of those ones which is just like either side of the moving averages. So we don't really have a trend at the moment. It's just a case of like, is this a developing trend? And so it is pausing while the moving averages are turning, which is probably which I think is positive. Could it consolidate for a little bit longer just to make it a bit clearer? So if it consolidates for a little bit longer, then breaks higher, that would be I think a reasonable entry point. I'd probably watch it for now and just see if we could get a bit more consolidation while the moving averages turn. If it were to stall here and then quickly start making its way back down below the moving averages, then it sort of like negates that potential setup which has been created. So that's why I'm probably inclined to just wait and see whether it can hold these gains a little bit longer while the moving averages cross, and then maybe buy the breakout, or buy if it continues to track sideways and we start really getting the idea, look, this stock is being underpinned by buying, then buy the dip as the moving averages cross. One to keep an eye on. I don't have a strong feel on it, but it's but I can see how this could develop into something which does see higher levels.
Okay, so we might stick to the US market. Kirby's seeing divergences between the XJO and market breadth indicators. Actually, something I was going to bring up before is if there's any other divergences, but you could have a look at that yourselves. Look for divergences in the charting. But let's stick to the US market because we've got quite a few tickers to get through, Jace. So let's go for NVIDIA, please, from Kay. Popular choice, obviously.
Yeah, it's coming back, isn't it? Coming back towards those previous highs. Look, it's a case of going with the momentum at the moment. It's not a stock which I'm particularly excited about, but there's nothing to say it can't keep strengthening. If I had it, well, I kind of do have it through like having S&P 500 exposure. At this point, I'd be going with the momentum. It's back above the moving averages. At the moment, the dip's it's only like 3 days, but it's rallied strongly, but it's holding those gains so far. I'd be giving this the benefit of the doubt that it can continue higher, that it can make new highs. Back below the moving averages, we can reassess, but at this point, the momentum's to the upside.
All right, let's have a look at SOXL.
So this is a semiconductor 3 times exposure ETF, and well, we've still got the declining moving averages, but the price action is building in a bullish fashion. So the rallies are strong and the dips are shallow and being bought. It's a way to play a bullish theme. I guess it could be bought at current levels, and we've got this gap below the market. So you could maybe have like when you're doing these leverage ones, the risk also becomes so much greater. Like even to have a reasonable stop, you're looking at 30%. That's like just below the top of that previous gap and a little bit more. So you kind of want to get the momentum from the onset with these ones, or you end up having like those wider risk points. It's probably not for me, but I just got to be careful with the leverage ones. You can get the right view, but the leverage just makes it harder to hold on to because the swings are wider. So sometimes you're better off maybe in an unleveraged ETF where you can just give it that bit more breathing space. Nothing worse than getting chopped out and then you find your viewpoints right. The structure isn't fantastic at the moment with it below declining moving averages, but then you'd look at what the unleveraged one looks like. Does that look stronger than the leveraged? And base decisions around what the unleveraged index looks like. And if that's getting back above moving averages like many parts of the US market is, well, maybe there's a play there. But yeah, just be careful with the leverage plays.
Okay, KNB, back on the Aussie market now.
Yeah, one of these low price stocks which has really come to life. If I was holding a few of these, I'd keep holding them for sure. The initial entry based on the moving average and breakouts would have been back at 2.5 cents or so. It's now up at 6. It's pulled back to the 50-day moving average, which is nothing unusual after a strong run. I'd be holding this for now. I'd be using a calculated ATR stop. It'd be a wide stop. It'd be back down, down around maybe 3.5 cents or something. So I risk giving back a lot of that move. And some people say, look, you risk giving back so much, but that's how I can stay on stocks which can rally 3, 4, 500% sometimes, not all the time, but sometimes. I don't need them all to rally that much to make a really big difference to the portfolio. So I'd be giving this plenty of room to move. I probably wouldn't be buying it at the moment. I want to see it stabilize around the moving averages rather than I'm also wary with low price stocks that they can rally quickly and they can come back quickly as well. So I probably don't want to buy it until I see some stability in the share price. But yeah, if I had it, I'm happy to hold it for now.
Okay, LTR.
Yeah, this is maybe coming back into play again. Back above the averages. I tried to sell off back in April, broke below a previous low point, but there was no follow through selling. Back to the moving averages in a strong rally through them. So we're now getting the pullback. So this is where we say, look, let's see what the next pullback looks like. Well, we're getting a glimpse of that now. What I'd like to see with this is that it now start finding support as it's approaching the moving averages. So as you've seen me draw in a few times today, do we get price action like such as these moving averages start to turn higher? If we got price action like this would be a really interesting play. It could be a case of buying just as the moving averages are catching it, or buying a breakout. But there's certainly the potential of a play developing here. It's one I'd like to keep an eye on. And if it ever goes, there's terrific upside potential there. So well worth keeping an eye on.
All right, good one there. Next one along. I'll try and get to everyone's. There's quite a bit here, obviously, Jace. So, but we'll just do one or two from everyone. PBH from Angelo.
So PointsBet, they've had a number of capital returns, I think. So what I'm going to do is see this adjust button. This will adjust for the capital returns and makes the share price look quite different. The price action is really, I wonder whether there's some takeover going on here because there's not really much movement in the share price now. I'd need to know what the corporate situation was, but I probably wouldn't be buying it. But if there's a takeover going on or something along those lines, it's maybe, I don't know. It could be sometimes often I sell just before a takeover becomes implemented, but I don't know. I'm just looking at the price action. It doesn't look like regular price action. You can see how the ranges are normally a lot wider. Now they're a lot narrower. That tells me something's probably going on with this stock. But it has been a good play. It'd be interesting to know what's going on. If I was holding it, I'd continue doing so, pending whatever is going on in the background.
All right. Next one, we'll have a look at it. Is Alessandra's at DTL.
Yeah, one of those ones which is just a bit messy around the moving averages at the moment. It's swung either side a few times, so it could be building something, but I probably need to see moving averages are now turning higher. It's sometimes the setups look nice and clear. Other times they're just messier. So when they're messier, I tend to just stay away from them. But someone's asking, so I'm looking at it, trying to formulate a view around it. I guess if this were to make another high, so then we start getting a series of rising lows and rising highs, then we start to saying, look, okay, maybe there's some upside momentum developing in this. It is on the good side of the moving averages, so it's got the potential to develop into a trend. There's nothing really special at the moment about it, I don't think. But yeah, let's see if it can make another high and just continue this sequence. I'd probably go at that strength and see where it takes us. Risk is managed with a trailing stop somewhere back below the 100-day moving average. So it's not an amazing setup, but one which could develop into something.
Okay, IKE.
Yeah, trends up in this one. It's a lower liquidity stock. You can tell by the price action that we see. There's lots of like dots and dashes, so shows it doesn't trade that actively. But the rallies have been impulsive in that they've been strong. And then the pullbacks to the moving averages look like consolidation. Strong rally, pull back into the moving average, consolidate, again, strong rally. If I'm in this, I'm happy staying into it, see where it goes. But again, having to be comfortable with a low liquidity stock. Possibly it could be bought at current levels. Probably, yeah, it could be bought at current levels with a 25% stop thereabouts, back below the 100-day moving average. My preferred buying point is usually when they come back and then they're just starting to break out. This one's run a bit, so it opens the possibility of consolidation. But yeah, overall, I think constructive looking price chart.
All right, let's have a look at. We've had a look at a few of these already. We've had a look at EOS, APX. Well, that was a favourite from last year. What's it doing now?
You haven't looked at this one for a bit, and yeah, we're spending a bit of time below the averages. Strong rally in the last week or two. Maybe there's a turnaround happening, but I'd be inclined just to leave this one alone for a bit. See whether it's able to hold on to these gains for a start. But yeah, it's if it holds onto the gains, we get the sideways price action and a secondary breakout. Well, then I think it starts becoming interesting. But first step, can it hold on to these gains? It's below the 100-day moving average, so I'm not in a hurry to make a move on this one at the moment. Something could develop, but yeah, I probably need a bit more price action to get a bit more confidence in it.
TLX.
Really just trading sideways. It is stuck consolidating below the 100-day moving average at the moment, which does add an element of vulnerability to it. It's really, I like when they consolidate above the averages, not below, because it does open up the possibility of like a move lower. So I wouldn't be buying it at this point because of that. But if I was in at good levels and using a wide stop, I'd continue using the wide trailing stop rather than reacting to this consolidation below the averages, because we do get that from time to time, and then the period weakness doesn't really develop and prices are back above the averages. So I think it's a hold. If I owned it, if I didn't own it, I'd be waiting. I'd be waiting for a breakout from this general period of sideways price action. You could say really need to see it. This isn't. There's not a good place to draw that lower line, but generally, you'd say there's it's working within this broader range. A breakout to the top side is probably what I'd want to consider buying it at this point. Otherwise, it's probably a hold.
Okay, MIN. N for Nelly.
This one. Yeah, it's still stuck below those moving averages. And it's interesting just seeing this price action. This isn't dissimilar to what we've just looked at Appen, where it's been down and out for a bit, then it has that sharp move back to the averages. And I said, yeah, look, just wait, and I'd just wait and see how the next consolidation looks. And if we'd done that in this situation, we never would have bought it, because the next consolidation wasn't able to hold us gains and it quickly gave way. So that's why I like to wait and see whether the consolidation can hold, and then you buy the breakout. Same would apply now. Let's see how this rally holds. It's come back to the 100-day moving average. There are positive aspects to it in that the rallies seem to have some reasonable strength to it, and then the consolidations seem to be so far fairly shallow. But now this is a test of the 100-day moving average. Can it hold these gains and break above the 100-day, or is it going to be another case of sell the rally back to the back to the 100-day moving average. So one to watch rather than act on at this point for me.
All right, fantastic. ASX.
Looks like it's breaking higher. So we could say there's generally been some resistance around that blue horizontal. Prices are above there now. The averages have turned higher. Got a bit stretched from the average from the 50-day. It's now just consolidating. Moving averages catching up. It's if I had it, I'd be happy holding it because possibly it could be considered as a buy. Maybe if we talked about the potential for the ASX 200 to pull back over the coming week or two or so on. If that were to happen, this would probably pull back too. So maybe it'd be a case of if we get a pullback, it could be a buy around the 50-day moving average, or then you're watching for the consolidation, maybe buying a breakout to new highs. But yeah, certainly a stock which could be going higher.
Okay, RHC.
Maybe turning around, but it like we've discussed with Appen and Mineral Resources. Let's see how this pullback develops. Can it hold its ground above the 100 or the 50-day moving averages? If it can do that, consolidate sideways, break to the top side, well, yeah, this could be a play. But if it does start to give back those gains, well, then stay away. So I wouldn't be getting in early just yet. Well worth watching, well worth the watch list. But I do note the moving averages are still in a negative position with the 50-day below the 100-day. It's delicately poised, this one. It could go either way. I can see the potential for a setup developing here. So it's one I think which is well worth keeping an eye on.
Yeah. YRL. YRL.
Yeah, well, tried to sell off below these previous lows. Wasn't any follow-through sellings. Quickly found its way back above the moving averages. I think that's positive. It's holding above the 100-day moving average at the moment. So far, it looks like it's a relatively shallow pullback. Looks like there's some interest in buying the dip. So yeah, I think there's a potential setup here. I guess the dip, the current. If you want to take a speculative position, preemptively, you buy. This dip could be bought with a stop, down around maybe 12 cents or something thereabouts, giving it a bit of room. Or alternatively, see if it continues to hold the moving averages, and then you buy the break higher. That's probably that's more reacting to the price action rather than preempting what might happen. That's probably might be my preferred way of handling a stock like this. But yeah, there's I think there's some potential in the setup.
Okay, ALC.
Yeah. The makings of upward momentum in this stock. You've got that classic consolidation along the 50-day moving average. So could be bought at current levels, or you buy the breakout above say 9 cents, say 9.3 cents or 9.5 cents, whatever increments it trades in. So yeah, it's got the structure which has the potential to take this higher, and it's at a point where risk can be managed just below the 100-day moving average. So I'd say it's asymmetric in its setup. Will it deliver? Well, time will tell. But I like the ones where we can say we can risk 10, 15, 20, 25%, and then ask the question, is this a stock that could double? And if that's a tick, it's like, well, that's asymmetric, isn't it? It's like risk is relatively small compared to the potential upside. and we're approaching this from the good side of the moving averages. So there's momentum already working in our favour. So that's when I want to play, when the risk reward and the odds appear to be tilted in my direction, as opposed to trying to buy something which is in decline below the moving averages. It's you can see there's a distinct difference to the structures, and it still doesn't mean we're going to get it right, but I want to play the law of numbers when we get the right setups. And this one, yeah, it's got enough potential to have a look at.
Okay, TNE.
Will I very much be holding this one? I wouldn't buy it now. It's just now stretched above the 50-day moving average. It's a motion trader stock. Initial signal was quite a while ago. How deep that pullback was. Not sure whether or not it got stopped out in that sell-off. The wide trailing stop may have just seen it off or may have just got clipped. Pretty sure it's still a motion trader stock, but not 100% sure. But yeah, if I was in this, I'd keep holding it. Trend's up, but yeah, it's stretched. So I don't think the risk reward favours buying it at current levels.
Mm-hmm. Good one if you got into it, obviously early. The last one here is MDB, please. MDB.
MDB, a US stock?
Yep, that's the one.
We've discussed this situation a bit. Below these moving averages, there is signs that the rallies are, there's interest in buying the rallies, and the pullbacks have been shallow, but it's too early for me for this one. I'd just be inclined to leave it alone. You can overlay the things I've said about other stocks with this one. It's got to get back above the averages, consolidate above the averages, and then look at it. At the moment, there's too much trying to pick the low to this one. So I'd be inclined just to leave this one for now.
All right, let's have a look at one more US stock, AMD.
It's a situation like Appen. So we've got this strong rally back above the moving averages. It's the next pullback, which now is important. Is it going to hold the gains or give them back? We saw a smaller version of this in March, strong rally into the averages, but then it didn't. There was no signs of it holding on the gains. Quickly gave them back. Even this rally from September last year, it was a strong rally above the averages, but then it wasn't able to hold on to them. It just quickly gave it back. You didn't get that sideways consolidation along the averages, which I like to see. So yeah, let's see with this one. It's worth keeping an eye on. There could be a turnaround in place. The 50-day average is starting to turn higher, but we've now got to establish ourselves. It now has to establish itself above the moving averages, and then I think the next pullback is the key for assessing how well it's doing that.
All right, fantastic. We've gone through a lot. There's one question here from JG, general question, which I'm trying to answer. What's your views on stocks which are demonstrating strong momentum and appearing to break out, but with high outstanding shorts?
That's probably look, it's not something I look at, but if I'm long a stock which is breaking out and looks, it's got a nice setup, plenty of reasons for owning it. I think it's probably a positive that there's high outstanding shorts, because they're likely to have to cover as price moves higher, which then fuels a rally. I think that's a positive factor. Not something I look for, but it's probably a bonus to a strong to an emerging trend which is naturally unfolding.
Okay, good response. I think we've had a great view of a whole bunch of stocks between potential opportunities in the middle, put it on your watch list, and obviously ones that aren't so favourable for our strategy and our rules that we look at in this show. So it's great Thanks for all your help there, Jason, and thank you for all your tickers, everyone. It's been fantastic once again to come here and have a look at these companies in the markets as they are today. Obviously, it could all change next week. Obviously, we could be sitting here saying something completely different, but once again, don't forget to like and subscribe down below. If you've got any comments or questions, you can put that down there as well, or feel free to shoot an email to me at support@selfwealth.com.au and just attention to Roger. If you've got a question for Jason, he's at jason@motiontrader.com.au. You can check out his service over at motiontrader.com.au as well. It's a fantastic service that it is. Other than that, Jace, thanks again.
Yeah, thanks, Rog, and thanks, viewers, for coming and joining us for another show. Wouldn't be a show without you guys. So thanks very much for joining in, and that's been fun. I've enjoyed it.
100%. All right. Well, we'll see you all again next week, and ciao for now. Bye bye. See you, everyone.